Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. Today's video is going to be a little bit of fun video where we talk about what super investors are buying or bought last quarter. So I'm going to go through with you guys 10 different stocks that the super investors, and I'm talking about these hedge fund managers that are managing multi-billion portfolios. What are they buying? And I'm going to show you the 10 different companies they're buying. All of these companies are dividend paying companies, so I have not included non-dividend paying companies. Majority of these companies are actually undervalued at the moment, but just one thing you need to remember is these guys have, this was for the last quarter, so they might have already sold it by now. Some of them are very much, like traders, if you like, so you have to be careful. And at the same time, don't just buy the stocks that they're buying, because again, you have to do your own research and find out. They have their own reasons, so you need to find out basically what your reasons are for buying these companies. Before we do that, two things. I'm going to address a question or a statement that were made basically in the last video. And the first thing I want to talk about though is the Patreon account. So if you haven't joined us on the Patreon account, please do so. It does really help the channel. And then at the same time, you get access to all the trackers that I use on my day-to-day. The other thing I want to talk about is also, the last video was about an ETF. And when you talk about ETFs, they have expense ratio, right? So this one that I own in my portfolio has a 0.3 expense ratio, which means basically that's the money that I will be paying to the company that basically put together this ETF. So they make sure that in terms of Sharia compliant, it's actually they buy and sell the stocks, they rebalance it. They basically is the maintenance fee, if you like, right? And the one that we talked about last video had a 0.4 percent basically expense ratio. So what I want to show you right now is I've got this called mutual fund calculator, which you can find online. If you just type that, you'll be able to find it. I have £74,000 right now in this portfolio. Imagine if I took that and I just straight away went to this ETF and put everything into this one single ETF. Just to give you an example, right? £74,000. Every single month I'm going to add $1,000. Okay, £74,000. Let's say I'm adding 70. Let's pretend all of this is in dollars, okay? Because I can't be bothered to find a UK version of this, right? So $1,000. Okay, pounds, whatever, and time horizon is 15 years. So in 15 years, I want to be able to basically, I'm going to keep doing this for 15 years, and after that, maybe just let the portfolio be as it is. Then the rate of return normally for the S&P 500, we're looking about 8 to 10%. So I'm going to go with the lower end. You can go with the 8 or 7, whichever you require. Okay, just to be on the safe side. And the fund expense ratio for that ETF that we looked at yesterday, or in fact, let's just start with this one first, okay, is 0.3. So you can find that information, by the way, if you go to an iShares website, you can easily find it. If we did that, okay, press calculate, okay, what you will notice is our gross earnings, basically our gross ending value, meaning basically before we pay for these fees, is $264,000, right, in 15 years. So we're starting with $74,000. We're investing every single month, basically $1,000 for 15 years. The expense ratio of 0.3, we will end up this. But after we paid for the expense ratio, right, we will end up $253. So basically, we're paying over $10,000 for this company to maintain this ETF. Over 15 years. And 15 years is not that long. I've been investing almost now, God knows, 4 years or whatever, right? That's not really that long, 15 years, if you think about it. If you're in your 20s and you're starting investment, that's not a very long time, okay? But you're paying £10,000. Now, let's now change this, okay? Let's say this was the ETF that we spoken about yesterday, okay? If you haven't seen that video, go and watch it. Press this. Okay, and you can see is almost increases to $14,000. Now imagine if you had portfolios in the 100. Okay, what happens then? Okay, sorry, let me add. So if we did that, okay, portfolio of $200,000, spend basically add 100 every single month for 15 years, paying about 0.4, you end up paying $35,000, more than $35,000 in fees. And this is one of the reasons why I feel like InshaAllah is basically buying ETFs has a lot of basically advantage. Have a watch that video that I basically did yesterday, so I've talked about that. But at the same time, that peace of mind, okay, that's what you're paying for that much money. So is it worth it? Then it's a decision that you have to make, okay? And especially with halal ones, because like if you look at all the other ETFs in all the other, for example, Vanguard, for example, is like 0.01, 0.02, 0.0 something, whereas we pay in 0.5%, sometimes closer to 1%. So just be mindful when you basically buying ETFs. That's what you're doing, okay? For now, I'm happy with what I have. I'm going to continue doing what I'm doing, and in the long run, hopefully these ETFs will be basically start costing us less and less, because these guys were actually charging initially 0.5, right now 0.3. So I'm hoping that in the next couple of years they will reduce it, because the market will have a lot more ETFs, halal ETFs, and we can reduce that. Now let's get to the video now, okay? So we've got 10 different companies. I'm going to be very quick. I'm just not going to read every single data, so I'm going to let you guys pause and have a look at it, but I'm going to talk about the individual stocks as much as I can, okay? Right, so the first one is Microsoft. There are 14 different investors or super investors that are buying this company. As you know, this company is the second biggest company in the S&P 500 after just Apple, and it looks like right now it's undervalued according to Morningstar. It's about 1% discounted. $325 per share is basically where the price it should be. 326 is basically where it is right now. So give or take, basically it is undervalued over basically just all flat right now. The dividends are not a lot, but they have increased that dividend. Obviously, the safety is 99%, and they do have a lot of cash if they basically want to reinvest in the business and so on. The next company we're looking at is Intuit. This is a company that we've spoken about recently, but apparently 9 different investors are actually buying this company, which is really interesting. Okay, 121 billion market cap. It has a wide economic moat. They are 14% right now discounted, and $503 per share is where the price should be. Dividend is not a lot, but they are increasing that dividend. Okay, 15% last time, 15% the 5-year growth rate, and then 10 years of increasing it, and you get $3.12 for every share of that company that you own, and the safety is absolutely perfect. They have a $4.26 billion of free cash flow, and the total return in the last 10 years is about 22%. So they are actually also expected to grow the business as well, which is really good. So they're increasing, the business is growing, discounted right now, nice dividend. That's probably why a lot of these guys are buying. Visa is the next one. Again, in a similar sort of a situation, 5 investors or super investors decided to buy this company, basically invest in this business. 7% discounted right now, excellent free cash flow, growing the business in the next 5 years. Okay, $241 per share is where the price should be. If you watched my recent video where I talked about this company, I actually added to my I had it, I think about 12 shares, 13 shares, whatever they were. Now I've got about 20 shares or so. So yeah, I really like the business. It's a great business. So 5 super investors are buying it. So I'm happy with that, to see that they're doing it. Now, we've talked about this company, Thermo Fisher Scientific, recently. Okay, it's one of the companies that I've analyzed recently. I think it was about just last week. So if you haven't seen that video, go and watch that one. So there have been 4 basically different investors that actually bought this company. $200 billion market cap, which is absolutely amazing. Well, huge, I mean, and 12% discounted right now. Okay, they are increasing that dividend. Okay, although the dividends it's not a lot, but they're increasing, and the safety is absolutely perfect. They have excellent free cash flow, and the business is actually growing in the next few years. So again, I'm going fast because I don't want to make the video longer, because we talked about a lot of these video companies before. So I just want to kind of give you an overview of what they're buying. So next one is Moody's. Again, another company we've talked about a long time ago. 4 basically different super investors are buying it. 61 billion market cap, has wide economic moat, payout is actually quite low. Dividends basically increases has been really good in the last 5 years, and 13 years of increasing that. $3, just above $3 is what you get. Safety is actually perfect. They have $1.3 billion of free cash flow, which is good. Right now is premium, 7% premium, $315 per share is where it should be. 300, it's about $20 above where it should be right now. The next company we look at is Medtronic. This is one of the companies that I have in my portfolio. 4 different super investors are buying this company. The company has gone down quite a bit recently. Right now, as you can see, it's 25% discounted. $112 per share is where the price should be. 83 is where it is right now. So the dividend yields for that reason has actually gone up about 3.3%, which is really nice. Payout 50%, but the safety is 99%, which is absolutely perfect. And they are basically dividend aristocrat. They will become dividend king very soon, in about 5 years down the line. The latest increase was not always pathetic, basically, if you think about it, 1.3. But I think the company is going, basically, obviously, the stocks are down a little bit. The growth side of it is actually not as bad, as good as it should be. Okay, so 7% this year, or almost 8%, and then it's slowing down from there onwards. So we will see. It's going through a transition, but we will see. Again, I have got that company in my portfolio. I'm happy to hold it for a long time. The next one is Taiwan Semiconductor. This is probably one of the best technology companies out there, or semiconductor, because every single thing that we've talked about in the last few months, and especially with the AI situation, all the companies that are coming up, is including Nvidia, their chips or whatever, this is the company that makes them. This is the company they go to when they want these chips to be made, right? So they design it. They were like, okay, now Nvidia, TSM, can you make this for us? Okay, and the majority of Apple basically is one of their biggest customers and so on. So if Apple prices go up, this company should be going up. But having said that, it hasn't gone up as much lately. But 26% discount right now, $139 per share is basically where it should be, but it's not there yet. So again, another great company. It's a really discounted right now, and 4 different investors have actually bought this company. UNP, or Union Pacific Corporation, is another company that they are buying. 4 different investors and super investors bought this company. It has 122 billion market cap. Again, 2% discounted, $203 per share is where the price should be. They have excellent free cash flow. Okay, they have been increasing that dividend for a long time, for 16 years. You get $5.20 for every share of this company that you own. And when you look at the latest increases, okay, it's actually absolutely amazing. So 18% recent one, and then 15% of the last 5 years. The 5-year growth rate of basically 15%, which is absolutely huge if you think about it. So again, another great company they're buying. Home Depot is another one that they started buying as well. I haven't seen this on the list for a long time, so it's interesting. 4 different investors actually bought this. It has almost 300 billion market cap. Is one of the biggest companies out there, but it's still expensive in my opinion. 15% premium, $259 per share is where the price should be right now. It's trading almost $300. They have excellent free cash flow. This company, about $13 billion. Okay, they increasing that dividend. They have increased it for 14 years. You get above $8 for every share of this company that you own, which is absolutely amazing. And the final company is Texas Instrument. Again, another 4 super investors are buying this company. 155 billion market cap. It's a semiconductor company. At the moment, it's kind of flat, 2% premium right now, $168 per share is where it should be. 117 is where it is right now. So if you think about, so they have increased that dividend for 19 years, and they're actually really growing it fast. Okay, almost 8%, then 17% in the last 5 years. You get about almost $5 for every share of this company that you own. So there you have it. That's the 10 different companies these guys are buying right now. That doesn't mean you should go away and buy them. That means maybe look into them, do your own research. If you're comfortable and you're happy with these type of companies, do it. Okay, it's really important that we basically don't just blindly buy these type of companies. I look at them, then again I do my research. Then if I feel like, you know what, this will be a good fit for my portfolio, then I will definitely buy this company. So some of them I've already like I said to you, I own Microsoft, I own Visa, I own Medtronic, I own UNP, Home Depot, and so on. So just to be transparent, okay, the companies that I've just talked about, I will show you exactly where they are, so you know what I'm talking about. There you go. There's Home Depot there, there's Medtronics there, there's Microsoft there, okay, and basically Visa is also on Union Pacific. Okay, I own all of these companies in my portfolio, so just to be transparent with you guys. Again, if you like this type of content, it takes a lot of time on preparation basically to put these videos together. It would be really nice if you can give the video a like, subscribe to the channel, join us on the Discord if you haven't joined us already, and just be careful when it comes to these ETFs that we've spoken about. Okay, you can just Google that and find out basically if you're interested in any of the other ETFs. For example, SPUI basically has a 0.5%. Okay, same goes for Halal as well. So you can actually look at these things and then decide how much am I willing to actually sacrifice for the sake of actually for that peace of mind, if you like. Have a wonderful day. Assalamu Alaikum.